Traders and friends right around the world. It is James here with you on this Thursday afternoon market recap. Not really all too much of an interesting trading session. The biggest thing which we can take away from it, however, was the fact that I guess up until about halfway through Thursday's trading session, the market was looking quite resilient. I mean, on the Dow Jones Industrial Average, we pushed up as high as about 16,550. However, for the second half of the trading session, we saw once again selling pressure flow back into the market. It has left us with what we call something between a doji candlestick and also a gravestone doji slash a shooting star. All three, I guess, technical breakdowns of the candlestick itself are relatively bearish. We've been stuck in no man's land really since the end of the capitulation, really since the date August 26th. We saw that 2-day rally, and since then, for the past 5 trading sessions, we have more or less just stagnated sideways. I'm not too sure if we really have compelling technical signals, either bullish or bearish, which is really going to dictate our immediate course of action in regards to short-term swing trades. Of our top 12 individual trade list over here on the left-hand side of my screen, we have had very little trading action, if any, this particular week. It isn't something which has come as a shock or a surprise to us. During the week or during last week's pro analysis discussion, we sat down and we spoke about the state of the markets and how we're really in a neutral type of trading zone. Long term, I shouldn't really say long term, I'd still say short to intermediate term, we are looking to see this market stabilize right around where we are currently trading, but ultimately we're looking for this market to slowly grind higher and make its way back up to anywhere just above really that 17,000 figure on the Dow Jones Industrial Average. This is where personally I will be taking on long-term hedges, and it'll be really intelligent location, at least chart-wise and structurally speaking, to really hedge against any continued downside risk which we see further into 2015 and obviously into 2016. At the moment, however, it's a little bit of a trade-off, isn't it? Because if we start enacting short positions down here at 16,370, where the Dow Jones is currently trading, we're looking at a lot of upside risk. I mean, if we trade all the way up to 17,000, we're looking at about a 630-point move, and really that's going to at least work against us in those short-term positions. So what I've really been doing personally is I've got all of my feet, or my 2 feet, out of the market, so to speak, and I'm just monitoring and watching this market, understanding that with patience will become a great reward in terms of trading opportunity. At the moment, it's not really the most ideal location to be transacting in the marketplace. Sure, if you can pick up some nice little swing trades, good for you, but the bigger types of trades which we are looking at, I mean the really big momentum turning, the transitional types of signals, are really going to happen up at these higher levels. The problem is, however, in terms of time, it isn't 100% compelling to suggest when in fact we will move back up to these areas. All we can really do is pinpoint, and when we get close to them, we can make the intelligent decision to start opening up those hedges. Just as easy as we can make the move up to this 17,000 level on the Dow Jones Industrial Average, we may once again come back down to about 15,638, put in some short-term double bottom, which will then result in the next short-term to intermediate-term rally higher. Again, we're in the middle of no man's or in the middle of nowhere, really, and the signals themselves are still bifurcated. So, I mean, if you're nibbling on any directional positions right now, understand that there isn't really a compelling momentum trade whatsoever. We're simply bouncing off from this support level, and probability dictates once again that we are going to see the move back up to 17,000. I've made it very clear what I will personally be doing, and of course I will convey those in terms of real trades and real strike prices, real options, real expiration dates to people in pro when in fact we move up into these higher levels. A lot can happen but before then, or before we get into those high levels, but I'm not suggesting that the market is going to break below 15,638. Same is true for the S&P 500. It's following a very similar course then, or in comparison to the Dow Jones Industrial Average. We've seen this little dead cat bounce, a little bit of a bear flag or bull flag, type of move setting up. Today we were only up 2.27 points, but we did come back up and retest that 1,975 level. I made a video yesterday or 2 days ago on the Dow Jones Industrial Average speaking about this death cross. The 100 has crossed below the 100. When we have a look at the S&P 500, we're getting very close to seeing that similar cross take place. And the longer or the longer we continue to stay below the 100 and the 200 on the NASDAQ as well, you're going to see this top line, which is the 100 simple moving average, take a nosedive lower and ultimately cross this 200 simple moving average, which will take additional time to adjust. The reason why I'm referencing the long-term simple moving averages is because I want to bring up the exponential moving averages. And looking back at this retrospectively, it really looks as though, once again, the 10 and the 20 exponential moving averages are acting as short-term resistance. That is entirely expected, especially when we start to break macro support. Oftentimes, we will come back up, and during this state of volatility, which we are seeing in the current markets, the 10 will act as short-term resistance. Ultimately, it will break. Price will push above the 10. We will see a slowdown at the 20, but ultimately, when we're talking about new trends setting up, often, more times than not, on a scale of probability, we will break above the 10, break above the 20, and the final line in the sand will be up here at the declining 50 exponential moving average. That is why this area up here, just above and around 17,000, is so critical to the long-term health of not only the Dow Jones Industrial Average. I can change to the S&P 500. You can see up here, it's coming in just below 2,050. And also on the NASDAQ up here, it is just, pardon me, I've still got my cough. Pardon me, I'm actually going back to my general practitioner for another appointment in 3 hours. But you can see just below, 4,950 on the NASDAQ as well. These are critical areas. The NASDAQ has held up relatively better than that of the Dow Jones Industrial Average and also the S&P 500. But again, just expect volatility to continue while we sort of base around these current levels which we are trading at. Ultimately, we are going to see that bounce, which is what you will want to be or look to at least start shorting into the face of strength, because ultimately we're looking for this market to fail and roll over once again at these levels as we set up the first legitimate lower high. I've covered this in great detail continuously in Pro and to a lesser degree in these YouTube market updates. Outside of that, again, it has been quite a slow week. We haven't really had all too many trade setups actually trigger. And I went into this in great detail over the weekend and said, well, you should be looking at the bigger picture, looking for the best opportunity to hedge long-term against this market rather than trying to squeak out a couple of bucks here and there on some individual trades. These momentum trades will set up, but right now they're going through some form of a management type of phase, a transitional type of phase where we're starting to build structure. And for those of you who've been following me for quite some time, understand that the upper and lower areas of market dynamics which form structure are so important when it comes to swing trades, because ultimately when we break above the structure, we set up these really nice neutral types of trades where we can get into some really nice momentum moves. Now, again, to the untrained eye, people don't understand how to trade these moves, but the longer you learn or the more time you participate in learning about the stock market and learning how to swing trade, you will start to see these opportunities arise. However, unfortunately, right now, it's a time where you should be out of the market. Understand that the market is going through some form of a short-term rebalancing, and we are going to have a much better time, even back down at support down here, to trade bullish if it does happen back up into this long-term macro resistance area, which has built throughout the entirety of 2015. I think I've covered everything which I wanted to cover in this Thursday afternoon market recap. Again, it's been somewhat of a slow week. I mean, outside of the Tuesday sell, if I change to the weekly candle, we tried to push down below our trigger, 268 points as at the close on Thursday. There's some, at least a high probability that we will see a continued sort of retracement on Friday, because the daily candle again suggests that we do have selling pressure. However, it is in line with that 10 exponential moving average. To surmise once again, the technical signals are bifurcated. They're all over the place. And we don't really have a great course of action in terms of momentum trades, immediate momentum trades as at the close on Thursday afternoon. Pick the levels where you want to enter the market. If you have a crystal ball and you can at least understand or have a higher chance of probability that the market's going to break up from this location, take the trade by all means. And if you have, again, a crystal ball suggesting that the market is going to break down to these lower levels, take the trade. However, I will simply be monitoring my individual trade setups and waiting for the best opportunity to hedge against continued short-term or downside risk moving further into 2015. Ladies and gentlemen, traders and friends around the world, I will be signing off right now. Again, I'm going back to the doctor in about 3 hours to see my blood test results, which should be interesting. But I will be back maybe on Friday as at the close. I'll see what the market does during Friday's trading session, but definitely this coming Saturday for the pro analysis class. I did miss pro 2 weeks ago due to illness. It was the first time I'd actually missed a class since November 2014, I think it was. And the last time before that date was January 2014. So third time in about a year and a half that I've actually missed a recording. But this week I will be back, and I'm hoping again that I'll continue to see my health improve. Until then, traders and friends right around the world, have an enjoyable Thursday evening. I will see you over the weekend in that pro analysis class. All the best, traders. Goodbye.